Big week for earnings. Obviously, the big banks kick it off. What's your top pick in this space, and what would this report tell us, in your mind, about the rest of this earnings season when it comes to big banks?
Well, I think JPMorgan is still at the top of the heap here. Top league tables are probably going to do well across the board in the capital markets, whether that's M&A activity, IPO activity, debt underwriting, et cetera. Also, very strong franchise in the lending space, right? Credit cards, domestic, they're expanding internationally, they're expanding in domestically in terms of branch offices. So, pretty good story to tell there. And I think that's what we're looking for across the board from banks is, still kind of anemic loan growth, low single digits. I think that begins to improve in 2025. We have a lower prime rate. We still expect some rate reductions in the back half of the year, but better interest margins. I think that's a key for the banks here. We've got less pressure on funding costs, and we have a steepening of the yield curve recently with the 10-year moving higher. So that's beneficial.
I want to go back to something you just talked about, loan growth. You said that it's going to be anemic going forward, or at least the environment's pretty anemic right now. Is JPMorgan the exception to that, or are all the banks impacted by what you call anemic loan growth?
Well, it depends on the mix of business. JPMorgan happens to have a large portion of credit cards, and credit cards have been a growth area in terms of lending, so that will be beneficial. Banks are still struggling a bit in terms of commercial lending, whether it's commercial real estate, obviously has its own problems. Housing, clearly mortgage activity has been low. So if your base of business is more skewed towards those areas, you'll have lower loan growth than banks with a better mix.
And which banks would be the ones you're talking about that have a better mix? Which banks out of the ones that we're talking about?
JPMorgan, Bank of America, Citigroup. That's where we'd expect some of the better loan growth numbers.
All right. So a lot of talk about the steepening of the yield curve. That's supposed to just create a better situation when it comes to net interest income, which is how a lot of these banks make a lot of their money, or a significant portion of revenues. In your mind, as we look ahead, we see policies from the incoming administration that could be inflationary. We've seen a lot of action in the bond market. How does that impact these big banks going forward?
Well, look, interest rates are always a tale of two stories for banks. Rising yields will tend to crimp loan growth, but at the same and also hurt the value of bond portfolios. But at the same time, there are other offsets, and a steeper yield curve will help net interest margins. Banks, not to a large extent, but they borrow short, lend long. Take advantage of the yield curve. So that's, that will be beneficial for banks. If the economy is strong and they can power through that and loan growth continues to improve, that's really the best of both worlds. So rates always have been a double-edged sword for banks. The great hedging is the name of the game, and how to win there.
All right, so you mentioned the IPO environment as well. We just actually, before you came on, we had the first AI IPO of the year. It debuted, finished flat yesterday, but moving higher in the pre-market. This start and some of the other things in the pipeline, how do these big banks view those? Are they optimistic about the IPO pipeline in 2025, or is that more of a 2026 story?
Well, the flywheel takes a while to obviously get started, and we've had a 2-year lull, 2+ year lull, really, in IPO activity for banks. So I think what we're looking to hear is some more constructive conversations, initial conversations going on, that the IPO pipeline is beginning to build. Typically at this point, you've had a long enough lull period where you should get some activity. There's a lot of private companies that would like to go public. You've got good valuations, you've got good capital formation, a lot of cash on the sidelines. And to the extent that some of these IPOs come out and do well, that tends to start that flywheel effect, and more companies will come to market. So I think there's a lot of pent-up demand in IPO activity, and I think we'll be looking for that to unfold basically in the second half of this year.